Hello ladies and gentlemen, welcome back to the second part of the advanced course video on price action. So I believe you have seen the first part and you have practiced it, and today we are going to discuss some points from the first part, and we are also going to see the major thing that we need in trading for binary options is trends. So in today's topic we will be covering trends and I'll be going more and more into detail. So let's start today's session. So why are trends so important for us? For us, in sense, I'm saying about the binary options trader. Because in the binary options, if you are dealing only for 5 minutes, 10 minutes or 20 minutes, or let's say half an hour or 1 hour, you need a small part of the trend to be on your side. That is a move of the price that should be in your direction on which you're taking trade. Otherwise, you will lose the trade. Number one. Number two, I believe we are not a kind of $1 million spenders, investors into the platform or trading. So we don't trade on $1 million or $2 million at a time. So in each trade we take minimum 10%, 20% of our max total investment. So in that way, if you see, our amount may not harm the movement of the price that much. So we have to stick to the trend. Stick to the trend in sense we have to take the trades in the direction of the trend so that we will survive. Because if we go against the trend, we are going to lose that trade. Okay, every time you're trading towards the trend, there are 95% of probability that you will win that trade, and every time that you go against the trend, there is a probability of 10% that you will win that trade. Okay, so let's be on the 90% side, let's not be on the 10% side. Okay, so starting with the trends, so the first part you have to understand in any chart is the major trend, what is the major trend and what is the minor trend. And for that I'll directly jump into the chart today. Okay, I'll show you some important part. Okay, so you see, if you keep zooming out this particular chart, you will find there are trends equally disturbing each other. Like you cannot say which is major and which is minor. At this point what I can see is, if I zoom out for 3 hours, I can see that the major trend is downtrend. Why I am saying the major trend is downtrend? That is because price was here and now the price is here within 3 hours. So the price has moved down. That is why I am saying the major trend is downtrend. But usually as a scalper, if you're seeing only for like 3 hours chart or 1 hour chart, 1 hour chart for with 1 minute candles, in that way, if you see, this is the major trend here is uptrend, because the price was here and currently the price is here. Okay, the price has reached this high already and now the price got pulled back and then the price is again reversing. Okay, so the trends are very important. In this way you should be able to pick out the major move of the trend and the minor move of the trend. Now if you zoom in further, still I can see from this part the major trend is uptrend and the minor trend seems to be a downtrend, which is very minimal, which is not even, you cannot say this is a downtrend because the price was here, price came all the way here, again price got up. So this was still a downtrend, but in context of this particular time frame and in context of this particular part of the chart from here to here. Okay, so that's how you should be able to first of all understand the trends. Now going deep into the trends, you see, any trend will not move like this. The trends are always considered to be in a wavy position. They will move like this, okay, in a form of wave. Okay, but opposite to that, the price moves in this direction. Sometimes it will cut the trend line, it will reverse, sometimes it will go above the trend line, it will reverse. So the trend, the price follows a kind of different direction with the trend. But if you see the highs of all the price, you will be able to understand the trend. Now this part you have to understand using the chart. Now in this chart, if I see, I'm seeing that the trend, the price has gone all the way up like this and it is reversing now. It has come down. So I'm not monitoring this area. I'm just seeing the trend has started reversing a little bit. Okay, and the trend has started reversing a little bit, and next confirmation that I am getting here is a strong candle. Now yesterday, if I hope you have gone through the other video, the first part, in that I have told you have to find out which are the strong candle and which are the weak candles. Okay, so the wavy part tells me I'm drawing the line from my eyes. I'm not drawing from any other SMAs or any other linear regression lines and all. So I'm just seeing that the price is moving and price has come down, and I'm seeing a strong candle here. Okay, so this is how you should understand the movement of the trend, not the price. Now price movement you would have understood from the candlestick movements. Okay, now when a price moves along with the trend, let me take you back to the fresh diagram. Let me draw a wave line of the trend. Let's say the trend was moving like this, like this, like this. Okay, and the trend is currently moving like this. So here this is an uptrend and this is a consolidation area. So that is what in our next part what we are seeing, the trend movements is up, down or consolidation. The trend moves in three directions basically. It is either up direction, down direction or consolidation. Okay, so we have to see currently what the trend is doing. Currently trend is under a kind of consolidation. Okay, and price will be moving like this. We'll go above the trend line, will come down. We'll go above the trend line, will come down. We'll go above the trend line, will come down. Sometime it will stick to the trend and then it will come down. Then it will capture that. So these parts, this basically, short reversals is called the pullback. Okay, so this short reversals for the price to align with the major or minor trend is called the pullbacks. So you should be aware which is the actual major trend and where are the pullbacks occurring. So how we can find out that also we are going to discuss in today's session. So for now what you have to understand is trend moves in a wavy pattern and the price moves in a sharpie pattern, which always most of the time crosses the trends and reverses and consolidates. So this part is called short reversals, pullback, consolidation, correction, all these things. There is also a concept of impulsive move. So sometimes this might be an impulsive move. Okay, now we will today discuss the impulsive move part also. So first let us understand what is the major trend and minor trend. So let's take out any chart and you do an exercise with me. Okay, what you do, I'll just go into, let's say I'm going into this chart. Okay, now here I am seeing the major trend is downtrend. Okay, and the minor trend is currently reversing. So it is currently minor trend is uptrend. So you can zoom out as much as you want. Okay, but if you are predicting next 1 or 2 candles, it's fair enough if you zoom in for three hours, that is more enough. And if you're predicting next candle, zoom in for 1 hour and just see how it is going. But before understanding this particular trend, you have to understand the whole story. So you see this trend has gone up and it has reversed. So here there is a consolidation going on. It might reverse down because the trend will move. The trend is showing a direction like this. If I draw a line from my eyes, an imaginary line, it shows that the price has reversed and is going to go down. There might be a little bit of buyers here, buying orders here, and a kind of consolidation. After that, most probably it will go down. So that probability is very important, that you should understand. Then you can zoom in to the chart and then you can pick up last 3 hours or last 1 hour what has happened and what is the major and minor, and accordingly you can go towards the trend direction. Now in our next session, I'm also going to explain you about considering this support and resistance part, from which you will have a better idea. Okay, so trends movement, picking up strong and weak trends. Now picking up strong and weak trends, which is very important part. Whenever a trend is reversed, for example, a trend is reversing so do not immediately take a trade when you see a kind of reversal like this. Sorry, when you see a reversal, trend will never reverse like price. Okay, because trend is like this. Trend, as I told you, let me explain you again. Let's say trend line moves like this, okay, wavy. Now when we see sometime the price has come like this, like this, like this, here we will get some kind of strong movement from the buyers, buying orders, because this is a wavy movement, right? So it is curving here, so it is going to have an impulsive move here, that you will see strong buying candles. So it doesn't mean that the trend will immediately reverse and it will go like this. No, this is a strong move from the buyers buying order that tells you that the buyers have stepped in. Okay, so then you should allow the sellers to complete, because this is a strong trend coming down like this, right? So you should allow the sellers to close it. I mean, they should again come and hit this particular line or go a little bit below this line. And then when you see a strong candle from buyers, then you can assume, or you can say that the trend is going to now continue a little bit and it is going to reverse completely. So that's why even if you see, when people draw an SMA, they tell you don't take a trade until your trend lines cross over. So the SMA does the same thing. What SMA does, SMA brings a line like this and the other line like this, and only when they cross over, it is considered to be the trend is in uptrend. But still the SMAs will not help you, because the price does not move always with the standard SMA. Sometimes it will move 21 SMA, sometimes it will move with respect to 10 SMA, sometimes it might move with respect to 60 SMA, so that you cannot predict with your standard trend lines or SMAs. You should manipulate those SMAs values to understand what is the current movement of the price. For example, if I see this is the loop, this is the trend now forming, so I will not take a 2120 SMA to understand this trend. What I'll do is I'll take the lowest point. So for my eyes, this is the lowest point, which is 6:46 p.m. and the highest point is here 8:39. 6:46 and between 8:39, this is the highest point, or you can say this. So I'll pick up this, which is closer. So 6:46 to 8:29. So which is almost 2 hours, right? 2 hours minus you can say some 16. So which is 120 minutes minus 16, that is 104. So I can take a relative SMA which is 104, and this is my major trend SMA because I am taking the SMA in this direction. And then I have to take an SMA which is a minor trend. Minor trend can be taken as half. Okay, 104. 104 in sense half of it is 52. Okay, so this is the actual place where the trend crossed, and when the trend line crossed here, you see you got an impulsive move from the buyers, and then it caught the uptrend until this spot. Okay, so again, these indicators I am using for you to understand the trends or the moving average, but you should not use this in trades every time. You should try to understand using this indicator. You should try to focus on the price, how price has converted here. And you see, when you got this strong buyer's entry, it was a kind of engulfing, and then you saw a candle, but still it reversed. So you should, as per this chart, you should allow the sellers to complete the loop, the selling orders to complete the loop. Then again it consolidated, it went to the same range and it hit, and it went to the same range, it hit, and then finally you saw an engulfing candle, which was a strong engulfing candle, and the trend started continuing. Now if you take my yesterday's video, the first video, because I prepared that video yesterday, so I'm telling that word yesterday. If you take the previous video and you start comparing the price, like what I said, the price has moved here like this. Don't go to each candle, I mean, I'm just saying the pattern. The price moved like this, then the price moved like this. You see, the lower the price is touching is going higher. Okay, then here the price actually made an impulsive move again, and it touched down. Finally, you can see that price and the trend are in the same direction. Price movement is strong and the trend movement is also strong in the same direction. So when you see that zigzag pattern matching with your trend, okay, So yesterday so the previous video I told you zigzag pattern. You have to just see those candles and understand that zigzag pattern. So when you saw that particular zigzag pattern is impulsive in one direction along with your trend, your trade, you can start, deciding when to enter into the trade. Now we will also discuss on what are the good candle patterns. When we understand that, when I tell you that candle patterns, you will easily be able to pick up those part and trade. But at the moment you have to understand that the price movement should match with the trend. So as soon as it matches with the trend, you will get a very good move of the buyers. And if it is not matching, that means you have not taken a trendy graph. Now a trendy graph also means you should not see wicks like this. You see, there are so many rejections, up and bottom, up and bottom, up and bottom. You can see so many rejections here, both sides. So that is not a trendy graph that can convert anytime, because the pressure is there from sellers and buyers as well. Okay, so here if you see, it's a little bit clean. You don't see too many rejections on the top. You are seeing only some rejection in the bottom, and again you are seeing some rejections in the bottom. So this is what is very important. When you are seeing a trendy graph, sometimes the price might move in a trendy fashion like this, but you will see a lot of wicks. When you see a lot of wicks in the opposite direction, coming from the opposite direction, it's a risk, because the price might reverse, because there might be a lot of sellers. It might reverse, it might create one more loop like this. Instead of reversing here, it will create two more loops like this, and then it will reverse. So there you might lose your trade. Okay, so you make sure that pressures, opposite direction pressure, should also be less when compared to the candle bodies. Okay, so you should, by seeing the price, you should first understand what is the major trend, what is the minor trend. Okay, now I will tell you the next topic, what we are going, picking up strong and weak trends. Sorry, this is WEAK, guys, I typed it wrongly. WEAK, weak trends, strong and weak trends. Now strong and weak trends are nothing but like this. So once you have trends is converting and you're seeing continuous 2 or 3 green candles, 2 or 3 green candles, I'm not talking about 5, 6 candles. When you're seeing 2 or 3 green candles continuously, then you can assume that that trend is going to be strong trend, because as soon as the trend has reversed, you have also seen some strong buyers coming in, and then you're seeing 2, 3 strong candles. Okay, so in that case, when you're seeing how to match it with the trend momentum, let's say your price has come like this, and like this, and your imaginary line is like this. Okay, and at this spot the trend is just breaking and going like this, because that's why you will see 2, 3 green candles. So that means the wave is started going up and you're seeing a strong buyer's entry. That means this trend is going to be a strong trend, because it has pushed so high, and then there might be a little bit of retracement, and it might reverse from this point itself and it might go again high. You understand? So this curve is what you have to draw with your eyes on the chart. Okay, so if you see how I will draw that chart, I'll draw and show you that. Now my curve is like this. At this spot I am seeing that there is a major trend and the minor trend was uptrend. Again I am following a, so my curve is like this. This is one. I'll take an SMA to show you my curve. I'll take some. Okay, this SMA will allow you to only take close part. I want to show you the low part, low value. So I'll go to envelopes. Under the envelopes I'll take some 50 and I will say low, apply. So you see the SMA tells that this is curved already and the price has cut it. Now the price has cut my imaginary line very strong. So that means this price is going to hit until this level at least, because this has cut very strong. Okay, as per my understanding, this should go at least until this point. That is, it should go until this point to reverse. because it has cut very strong. So these are the things which you have to see. Now when you see a strong movement but you see a small retracement here like this, and then a strong candle coming from the buyers, that means this is a weak trend. This is a small move in the up direction, but it's a weak trend because already sellers started popping in. When you see candles like this continuously forming red with the pressure, this is a strong trend towards down. Okay, so this is what you have to understand. Whenever you see a trend going up and you're seeing continuously green candles forming of an average size, okay, not like strong candles and then one red candle, then a strong candle, then a red candle, not like that. It should move like this, 1 2 3 4, you see all strong candles, and the size of the candle is also growing. After this small candle we are seeing a bigger candle, after this strong candle I'm seeing a bigger candle. So in that way this particular price is very strong move, and this is a weak move because here I'm seeing some sellers, here I'm seeing some sellers, here again I'm seeing some sellers, and here I'm seeing again sellers. So this is a weak uptrend and it's a strong downtrend in this loop, in this particular part. Now at this part, if you see, I'm already seeing some buyers coming in here from this part. Already they have come, so I know, and I'm seeing a strong rejection also from here. So that means here it might reverse. It will not reverse here. Very rarely you might get one candle here, one green, and then again it will follow to go down. But here it will reverse 95% because it has already reversed from here very strong, and it's a recent level, recent reversal. It is not even like 2 hours, 3 hours. It is just 5-10 minutes or 20 minutes before it has reversed. So these buyers might be still hanging up here. Okay, so this is how you should understand the weak and the strong strong candle movements. Okay, trend movements. So let's tell it. For your understanding, I'm drawing the indicators. Don't put it as a habit. Just for understanding this loop, you can draw and you can see. I took 50 candles just like that, but you can count what is this below. It is like the lowest point was here, which is 918, and the highest point here was 945. So it is like 25. Okay, and I took the low to understand the flow. So you see now this. If you draw an imaginary middle line, and that imaginary line should cross the middle line it should cross the price with the middle line. Okay, so this is one way of doing it. Now the second way, if you are not able to see that, if you are not able to see the middle line from your eyes, do one thing. Take the trend line, take the lowest point and the highest point of that loop, because this loop is engulfed within this loop, right? So this loop is this particular move is engulfing this move, this complete move. So that's why I'm taking this as my high and low, and then I am drawing a center line here. Okay, so this is my center spot. So this is the place where the price should have reversed to go up, but price did not reverse. It is reversing below this. Now what does this mean? The price has come down and now it is moving up. When it was so strong, it should have broken this level and gone down, right? Now sometimes what happened, you see here there is a doji. Doji means here the buyers and the sellers were not so much interested, or they were equal in power. Okay, so there is a doji here, and this is my center point of the trend, and there is a doji I am seeing. So that means both are equal in power, and at this spot the major trend was downtrend. So that's why most probably this sellers popped in. Now as soon as they popped in, they have actually digged. They have digged into the buyer's area. They have digged. You can see this is a dig into the buyer. They have tested this level. As soon as they test, buyers came in. Buying orders popped in. Now again, if you see, now this is showing a kind of strong symbolization. That is, one is hammer, pure hammer. Then I am seeing a candle. Then I am seeing another candle with a very strong bearish momentum, and a weaker candle of red weak candle. So that is a kind of pullback it is doing here, but it will touch at least the half of this, because this is a strong move from the buyers. And when we see from where it has reversed, this is giving me an upper trend line. It has reversed in the middle of the trend. It did not finish the whole loop. In fact, it reversed in the middle. That means the buyers have come quickly here. So that is what you have to see. So this is just a retracement. It might occur for 1 or 2 minutes, and then at least one green candle I will see here. Okay, so this is how you should see which are the weak spots of a trend and which are the strong spots of a trend. So this is a strong spot and this is a weak spot. Okay, so strong and weak trends. So strong and weak trends, as I told you, this is a weak trend here, and here again it is becoming weak because I'm seeing two candles here, red. So this trend is also weakened now. So the green will still come up, still they will come at least till this point, and then they might reverse. So you should be able to pick out a center point like this, guys. This part which I'm explaining you, this you will not find in YouTube anywhere. This is a very sensitive part. For any trend, the middle point is very important. You have to understand the middle point of that, because the trends move in the wavy pattern, and if you don't know the middle point of the price, if you don't predict the middle part of the price, you will not be able to capture whether those candles are pullback or whether those candles is a reversal. Okay, so in any given moment of time when you're going into a chart, you should be able to pull up a middle point. For example, here I will take, I'm just taking this part and I'm taking a middle point here. This dot tells me this is the middle lower low to higher high in this particular context of the price chart. So this is my middle line, and you see the price touched this and price has reversed. And for the major trend, the middle line is here. You see, so this is a kind of support level which you cannot find when you see this trend on the spot. Okay, you don't have to refer the whole chart to get this point. You can immediately catch it here itself, so that you will save time and you will be able to trade. So this is a kind of pullback that happened and the trend started going up. Okay, so this is how you should be calculating each and every center point, which is very important. Even if you take a trend like this, for example, if some trend lines, because trend line is a very good indicator which runs with the price. It's not lagging, it runs with the price. Again, it is not it doesn't allows you to predict, but it allows you to run with the price. It runs with the price. That is a very important thing, whereas all the SMAs and other things do not run with the price. Okay, so this is kind of my trend line. If I have to take a middle line also in this always. So I will take a middle line, drawing from this center to this. So you see on this middle line, whenever it hit this middle line, it will reverse. It hit this middle line, it came back. So what it is doing is, let me remove all this and draw a proper middle line. Now if you can't take a middle line properly, what you can do is just take the lowest low and the higher high, and then take the higher low of this candle and the lower high. So you get this intersection point. So this is your middle line. So you can draw a line from here crossing this particular line. Okay, I will remove the other two lines. Now this is my middle line, you see. So whenever the price has digged into this, so whenever a candle crosses this line, just imagine that it is digging into the buyer's area. It is digging the buyers. It is asking the question, because you're feeling the candle here. This candle is asking the buyers, hey guys, are you ready to buy? Are you strong here? Are you strong enough here to reject me? That is what it is asking. And as soon as it digged, you see the buyers came up. As soon as it digged, you see the buyers came up. As soon as it digged, the buyers came up. As soon as the buyers came up, here the sellers digged. Buyers actually digged into the sellers, and here sellers told we are strong. You understand? You should understand the story like this. So this is very important part. You should pick the center point of all the trends, which is major point where your curvy waves will, where your curvy trends will meet. So the concept of picking up the center point, since the wave is like this, the trendy wave, and the price moves like this, so this will allow you to match your price action with the curvy waves. So this center line will help you to spot out the reverse at the earlier stage itself. So if a price has reacted to this particular point, now you see as soon as it hit the middle point, now let us take this story itself. Now what we did initially, we took this particular chart and we took this particular higher low and we took this higher low and we mapped their middle points, right? Because luckily it's good that I got this patterns here itself. Now you see this was the middle line. Now as soon as, now if you see, if you take the previous video, what I have told, the price moves like this. Price has moved here, then the price came down, touched here, and the price moved again here, and the price is coming down. That means it is consolidating. Now you see the lowest low is here. So now the price is in the straight direction. So here I cannot say what is going to happen next. So because it is under, it is going into a consolidation. Now as soon as it hit this level, we saw some sellers coming in. So you can understand from this, when it hits this level, surely the sellers will come and break this point, because this is the center point of the minor trend and this is the center point of the major trend. So the minor trend is playing here its role, but the major trend has to start from here. Major trend means major trends, sellers will start coming from this point. So before that it will consolidate, and this is a very good sign, because as soon as it crossed the middle point of minor trend, we are seeing sellers entry and we are seeing some seller pressure also. Okay, so this is not a pullback, guys, because here the trend will reverse, because the major trend half is not yet reached. As soon as it hit that level, it will reverse and it will break this level. So this is how you should be understanding. If you didn't understand this concept, please rewind the video and see from the part where you think you are not understanding it. Okay, now in this middle point, when you see a candle going up, it is not that it will reverse with a rejection. That is also I am telling you. Okay, sometime what will happen, we want the candle to dig. So this candle is asking the questions. These are all sellers here. It is asking a question, are you strong enough to reject me? So sometime this candle might break up, okay, and then it will reverse. Sometime this candle will close here, it will reverse. Sometime this candle will go up to this level and then it will reverse. Okay, so you see, as we were discussing, the event occurred. As soon as it digged into the sellers, now the sellers came and broke this level. Even if they don't break this level, they will surely break, because now the major trend has come into the action. So once the major trend has come, I am seeing an engulfing candle. The price movement is now like this. The price movement is now, it went all the way up and now it is like this. Okay, so now it is digging into the buyer. So most probably there will be a retracement where the price might go up again, touch this level, or maybe a little bit higher, and then it will reverse again. Or it might come again back to this half point there, because there is a row number here, which is very important. You have to see the row numbers also. There is a row number here, but this is a strong candle, so that's why this might reverse a little bit and come back and follow the trend, or otherwise it might go up to this level and reverse also if these buyers are strong here, you know. So you have to see this video again and again to feel the trend. Like you felt the candles, you have to feel the trend, and when you're feeling with the trend and the candle matches, then you can take a trade. Then you're on the probability of winning trades. Then you're on the side of the winners. If you are expecting a kind of, okay, the trend has come here, I'm seeing an engulfing candle, I will immediately take a down trade. No, it has to go and hit that center line of that trend, and then it has to show you the response. What is the response? Look, as soon as it cut the center line, we saw some buyers coming in and then the sellers bought it down. Okay, so now this has shown you that the wave movement and the price movement are in one direction. That means the trend and the momentum of the price movement is in the same direction. So now I know this is going to go down. You understand? At least until this level or this level. Okay, so this is how, guys, you should understand the trends. If you understood the trends and you understood the price movement, match it with the trend, and then it is very easy for you to predict any candles at any level. Okay, maybe I have posted a choppy market trading. I have done some practice trading on choppy market because I'm improving my skills. I want to even trade in the choppy market. Okay, so I'm improving my skills on that. So I have just posted a video a couple of weeks before, or 1 week before, I don't know. Just go and see. I will have mentioned choppy market trading. You can see that I'm practicing now on the choppy market, so that if you're with the trend and if you know the price action properly, you're reading the wicks properly, you can even trade in choppy markets. Okay, and if you want to be up to that level, you have to practice. This is not something which will come by night into you guys. You have to understand. You have to understand each and every movement. You have to wait, and then you have to take up a call. Now I will also tell you this center point, sometimes this green candles will break. It will go and dig this point which is here, and then it will reverse. So don't think that as soon as it broke the center point it will reverse. No, sometimes it will go more higher and dig here and it will form here. Now what is this happening here? If you see, it's a kind of head and shoulder pattern. It is forming. It is forming a head and shoulder pattern. So we don't have to worry about the head and shoulder pattern, or if our spots are perfect and if we understood the trend properly, we don't have to worry about whether the trend is in head and shoulder pattern or what is it is shoulder head pattern. We don't want to know. Okay, we can still trade. Head and shoulder pattern is just a signal that this is the neckline for me and it is going to go till down here. That's a kind of confirmation, second confirmation. I would see that in the last stage, but you see, sometimes it will not even do that. But at this spot when I predicted it, we would have won this trade. Understand? So don't rely only upon the patterns. Rely with the trend, price movement, and the third thing that you should rely is the pattern. Number one thing, you should rely on the trend. Then you should analyze the price movement along with the trend. Number third is the pattern. When you match this all three and all three are is in your favor, there is one more thing that I will tell you. So that in the coming videos, the next session I'll tell you. But for now, these are the three things that you have to understand with the trends. Okay. So let us see. Okay, what are strong and weak reversals? Strong and weak reversals are very simple to understand. When you have mapped the trend and you're seeing two small candles like this, which are not even crossing this particular candle, after which they have appeared, they are not even crossing that particular candle's close or open. That means those are pullback candles. Okay, you have to keep that. Sometimes this pullback might go until this point and then reverse. Okay, so these are all pullback candles, because you can straightforwardly understand here, these are strong candles, these are weaker candles, and this is a strong candle, weaker candle, strong candle, weaker candle. So until this area it was all pullback candles or a correction candles, but this is a reversal candle. So because this was very strong when compared to this candle, this candle, this candle. So in this area, this was a very strong candle. So this is a reversal candle. You understand that? So, and you see now the price, as soon as it hit this point, it is starting to reverse. Okay. So you have to understand. That's why I told you in my previous video to understand which are the strong candles and which are the weak candles. So those weak candles will tell you that these are the pullbacks. Okay. So what are the next? So strong and weak reversals means these are weak reversals, these are strong reversals. Okay, and this trend is already weakened because we saw so many sellers coming into this area, but here it is fair strong, a little bit strong. I am seeing again a strong candle from this. Okay, so this is how you should understand. Now picking up baseline of the price movement. The baseline is nothing. This is what is the baseline, the center line of your trend and your price movement. The center line, if you started picking the center line while practicing, you will be able to develop this within your eyes. When you see a pattern, when you see a kind of loop of the trend, you will be able to automatically, your eyes will be able to draw imaginary center lines. So those center line are the baselines actually, and the baselines is not only this straight and this, you should also see this is also a baseline. You should see all these angles. This is also a baseline, Okay, and this is also a baseline. That is, one is the one base, few baselines are those which you will pick up from the middle of the price, and the two major baselines you will take it from the high and lows of the price. So this is the middle baseline and this is the high and low baselines. Okay, so you have to take one baseline for high, matching the high, one baseline for low, matching the lows, highs and lows, and one baseline or two baselines based upon the price movement. So this is your center baseline. Here is the center baseline. These are my center points. Okay, so this is how you should start working on this. Practice this, practice this, practice this. Okay, let's see. Comparing the price movement with the trend, as I told you, once you are your price movement, that is your zigzag movement. Let me show you in this diagram. Once you understood that one candle or two candles, three candles have started going like this, and your major trend or minor trend has started going like this, your trend, your baseline, and your candles are moving in that direction. That means you can take trade in the direction of the trend. So that is the baseline mainly. If you understood the baseline properly, you can even take trades on this pullback, because you know that this is my baseline and it has crossed the baseline. There will be a pullback, again there will be sellers, again there will be pullback. So the story will be continuing like this. It happens mostly in the trendy market. So whenever you see a candle breaking the center point like this very strongly, that means it is going to range a little bit. Okay, it is going to range for a while. That is very important. When you see one candle not obeying the center lines of your trend lines that you have drawn, that means it is going to range, which it has done here. If you see, it has ranged in this area. Because this candle did not obey the center line. Similarly, when your candle breaks the trend line like a strong, like without obeying it, that means it is going to do a range, because it will go and touch the extreme. It will go and dig into the extreme sellers area, and the sellers will bring it back down, and then it will go and try to go and dig the extreme sellers area. Sellers will bring it down. So this part was completely ranging part. So that also you have to see. When, again I'm repeating, when a strong candle breaks your trend lines or breaks your center lines without respecting them, without getting enough rejection, they directly broke in one shot, that means the price is going to range for a while at least. So you should be understanding that as well. So as soon as it breaks, don't immediately trade, okay, it has broken, I'll get 2 or 3 more big candles. No, sometimes you will get, sometimes you may not, because that is where your SNR will come into action, which we will discuss in another part, where I can trust that big candles, where I cannot. So that is why when you see strong candles, sometimes they will obey the center line. That's why they will reverse. If the big candles do not obey the center line of the trend, they will range. If the bigger candles did not obey any of the lines, that means there is some news event, the price is going to go high and you don't know what is going to happen. Okay, the speed of the candle is also very important. Like I told you yesterday, if the speed of the candle you're not able to match with your eyes, please go into the higher time frame and try to work it from the higher time frame. Okay, so comparing the candlesticks with the trend movement. Okay, so this part we saw, when you see with the trend is moving down and you're seeing a strong candle against the buyer's area, or again from the selling triangle, from the selling angles, then you will be able to understand that that is a reversal. So that is a strong candle. Understand, then you can take a put trade for 1 or 2 minutes depending upon the movement of the price, movement of the trend. Okay, so like I told you, you should match first of all the major and minor trend. How is your price reacting? You have to have that baseline in your mind, in your eyes. Baseline, how is your price reacting over that baseline? Then what is the reversal strength? Means as soon as it hit your baseline, it reversed very strongly. That part you have to see. There is a third part, and it is in the direction of your major trend. So you can trust it for a while and you can take some trades, 1 or 2 trades. Now the fourth part, which I told you that I will tell you, that is nothing but the momentum. that is momentum of the price. So momentum is nothing but the speed, or you can say the volume. Normal formula for momentum is mass into velocity. Mass here is your volume and velocity is the speed of the candle, how quicker it is moving. So that is very important. So it is, momentum is nothing in trading also, it is simple mass into volume. Okay, distance traveled by that particular volume. So that momentum should be fair enough, should be good, it should be moving, it should go and dig into some buyers or sellers area and come back. It should, so like this, right? I was talking today, I think it's a good chart here, good chart moving. So as soon as it hit, you see the momentum of sellers came in. Okay, so that is very important. You should understand momentum must be there. If you're seeing small candles all over around, that means it is not a good momentum to trade. You don't have momentum. Momentum means you don't have volume, or your volume and momentum are in two opposite directions, where your volume is more on to sell and your momentum is towards buy. So if that is the scenario, then it is of no use. Don't trade on that chart. Go to a chart where you find enough momentum, where you can see what is the candle doing. Candles digging into sellers area and sellers are coming up, candles digging into buyers area and buyers are coming up. So that kind of momentum you should see. Now you see here it's still ranging. When you see one candle, second candle small and red candle, so it's going to go into a kind of consolidation. So it is an engulfing. The levels are here there is one level, here there is one level, and here I'm seeing an engulfing without a kind of level. That means it is not going to stay so long. So that's why we show a short reversal. So this trend is pushing, this minute uptrend is pushing the price up, and this minute sellers are pushing the price down here. That is what happened in this candle. So here buyers won, because buyers tried to push it up, sellers tried to push it down. Finally the end result was candle was, and if you see, the price is moving now like this. Price went all the way up, then my price movement, if you see, it came all the way down, then it went into the up, and then it is moving down. So my trend, my price is saying that both are going to, next candle would go down. But here I have a problem, because this trend is not so strong. Because if you see, after a red candle, if this seller should have come in this spot itself, but these sellers did not come here. They came after 1 minute. That means the momentum here is slow. The sellers are coming, but sellers are coming after 1 minute. Okay, so in that case, this area is a doubtful area, because here suddenly buyers might pop in, because the momentum is slow. So this momentum you should match. If you match the momentum with your price action and your trends, you will be able to win the trades. Okay, so you have to keep practicing this, guys. Now SNR, let us see a few concepts of SNR. I'm not going to go in detail. Now SNR, when you see highest point and the lowest point, you can consider this to be your baseline, which is a support level. You can see this is your baseline and my center point is here. Simple. If you see this, if you're not able to draw this, I think you should know what else you can use. If you're not able to draw these three lines properly, then you can use something called Fibonacci. The Fibonacci, there is something called 50 line. You see, that 50 line is matching with my 50 line, which I have put. So that is the same thing. But in that, I am not taking up this quarter lines. I am taking only the center lines. Okay, so that's why I didn't draw. Even if you want to take this lines, that is also possible. Without Fibonacci, you can draw these lines. How you can draw these areas? Just by taking another trend line from center point to the highest point. You got another center point here. So this is the 25% trend line, and this is another center point I need. So I'm drawing like this, and I'm taking another center point. Here also I can notice what is happening. So at this center point also, you see the price was keeping on jumping. So this is also another method where you can start understanding how the price moves. So if you see here, the price moved up, came down, went up, came down. Now in my previous video, I have told you to minutely watch each and every candle's price movement. But once you have practiced with this, you don't have to watch each and every candle's movement. Then you should start watching. You will understand the movement of the price through each and every candle. But when you're seeing a trend, you will understand that, okay, now the price has all the way moved like this. Then it has come a little bit down, and then it has come a little bit up. Then it has come a little bit down. Like this, you will be matching it along with your trend. When you see along with your trend, now then you will be able to take some trades. Now you have to make sure that you are not in a consolidating area. If a consolidation area could occur anywhere, right? So the main thing in a consolidation area is you are seeing a strong candle, okay, in the direction of major trend. Immediately don't take a trade, because strong candles are always sign of reversals. You wait for next one candle to close, and you're seeing a green candle which has not crossed the open point of the previous candle. The trend is downtrend, so this is suspicious. Then you're seeing a red candle again which has not crossed the open point of the previous candle. Okay, so this is also again a doubtful, because I'm seeing one red, green, red, so it could go into consolidation like this. So if you see, the price came like this, went up like this, like this, like this, it could go into consolidation. But this candle broke all the opens, all the previous highs. But again, this candle is breaking one of the center line. It is digging into the seller's area, so I need to see what happens here. So all these things you have to know. Now this is kind of consolidation move, guys, so it is not good to trade in this kind of place, because it is consolidating. Since it has reached this half point, it has started consolidating, so it might come back here and go down for some time, and then it will break. Now the next good spot to trade is either, with my total analysis, I am seeing that my baseline tells the curve is going to go down. So again, once it breaks and closes here in this center line around this area, you can trade on the down direction, because it will come and touch. Now as soon as again this event is occurring, let me explain you. Now what does this event tells you here? It crossed the center line. As soon as it crossed, I am seeing sellers coming into it. Sellers bought back below that center line. Okay, but this is a strong candle, so I will still wait. It has to come back here until it has to break this candle at least, or I should see 2-3 red candles in this area. Then I can trust. The momentum is also fair enough on both sides, buying side also and selling side also. So this is, I think it's too much information, guys. You have to analyze yourself also. Now once you started understanding this, you will get some bulbs over your head, and then you will get some alarms. Okay, this is what is doing, this is what the price is doing. So you will also understand from your side. Don't try to observe all my techniques. Okay, see what is good for you and pick up those and work on that. What suits your personality the most, you do that. Again, on that, I will also advise you, for some people binary option is a very good thing, because it matches their personality. They might be aggressive in nature, they might be patienceless in nature, so for them it might match very nicely. For some people, longer trades might match nicely. They are more patient, they are more calm, they are very protective, and they think a lot before taking a trade. For them, maybe longer term trades will match. These techniques will help you in both ways, but I cannot guarantee you for longer trades. These techniques will mostly help you in binary. But what you should do is, you should not cheat yourself. You should not tell that, okay, by nature I am not a kind of person who can simply go and trade for 1 minute or 2 minutes and win and come back. By nature I am a kind of person who can trade for longer time. So don't cheat yourself, don't copy others, like, okay, this guy is also doing binary, I also want to do the binary. That won't work. Trading have something called psychology. Now that psychology depends upon sentiments and all this stuff. Okay, we can measure each and every part of trading except for the psychology of the traders, because there is no max formula. Like I told you, we can measure center points, we can measure support resistance, we can measure the momentum, we can measure the trends, But at the end of the day, there is one factor which cannot be measured. It's the human psychology and human sentiments. There is no max formula for that. You understand? So that is very important. So people who are like not understanding that part, if they're cheating themselves, they're cheating their own nature, that no, I will be able to somehow manage in binary trading. Don't do it. You should be of that nature. I did it for like 4 to 5 months. It took me to understand my nature and match it with my trading platform. Okay. So similarly, you should now itself take that. You don't have to waste that much 4 to 5 months and waste that much of money. You should decide now itself like what you're planning to do and how is your nature. Okay. And how you can match with this particular platform, either long trading or short-term trading, stock or forex. That also you can test it out. But the concepts of trend, support, everything remains same. Okay, everything remains same when it comes to smaller time frame, when it comes to longer time frame. So everything remains same. The only thing is, in smaller time frames you will have a lot of noise, whereas in longer time frames you don't have that much of noise. Noise in sense small candles forming up. In longer time frame you will also have that, but you will not have as much as you get in the smaller time frames. That's why. Okay, so make sure that you're on the right page. Okay, don't try to overload yourself and lose trading. Okay, trend versus momentum, that is the very important part last for today's session. Trend versus momentum is a very important part, guys. What you have to do in trend versus momentum is, I tell you, my momentum, my trend, my price action, my center points, that is center points, wave part of the trend, all should be in one direction. I can then take a trade. Now if you want to understand the momentum, or you want to understand the volatility of the price movement, okay, I don't use that term so many times, so I got a little bit stuck. Volatility so many times, then you can go into the Bollinger Band. Just for understanding, guys, just take a Bollinger Band with the default setting. Just try to understand the movement, the total volatility, which will tell you, which is connected into a kind of momentum as well. And you can take I would prefer you can also take stochastic oscillator. Okay, you can take stochastic oscillator with the default setting. You can understand this. Okay, when this blue line crosses below this, now you see the volatility is less. That means the momentum is, both lines are touching. At this part the momentum is not so good in one direction, and the trend says that the volatility tells me that it is going to go straight. Like this also you can learn for learning purpose. Here you see both were in the same direction. The trend of the Bollinger Band was also showing that it is going down. It was in the down direction. This line was in the down direction. Here this was also in the down direction. So this kind of thing you can understand. For understanding purpose, you can put it, you can watch it once, because your momentum is correct or not. If your momentum is correct, then you can take. Now don't trade with indicators, but still for your understanding also, don't depend upon the crossovers, because crossovers in any indicator, I will tell you what are those points. Crossovers in any indicator are the digging of the candles. That means at a crossover, a candle is digging into the opposite directions area. That is what happened here. Just I'm saying today market is like obeying everything, all the rules. Look, here we saw a crossover. As soon as we saw a crossover, we are seeing some sellers coming into it. We saw strong pressure. That means at the crossover, usually the candles, what they do is they dig into the sellers area. And with this crossover, I am also seeing a kind of Bollinger Band extreme top. It has reached. So the next candle might go down. You never know. The Bollinger Band is saying it is straight. You see the Bollinger Band at the moment, it is saying volatility is straight. That means your momentum is not so good. Volatility trend is straight. The volatility is not so good. So this candle could go up or down. You can never know. Now you see it went down. If I would have taken this trade, okay, I'm seeing a strong candle in this area. This candle is bigger than this, and also the stochastic has crossed over. That means you would have lost this trade. What you have to understand, whenever there is a crossover in any indicator, it is digging into the seller's area or it is digging into the buyer's area. We have to see the response after that crossover. After that response, we can take a trade. You can even, but you don't have to take a trade. This is for your understanding. Now the trend is currently straight, ranging. Bollinger Band tells me my stochastic is saying that it is below the overbought, and the candles also I'm seeing are straight opposite. It is above, even though it is in the overbought, I'm still seeing red candles here. So it is all mismatching. So this is not a right place to trade. Okay. In case if you are not able to judge the trend by seeing it. But once you have practiced it, you don't need anything. You have to trade with the price action. That is the concept here. So never, just for understanding, use all the indicators are favorite for you. Maybe some people like RSI, some people like CCI, all these things. You use those things, not at all a problem, but only for understanding. After understanding, remove that and watch the price, because if you don't understand the actual fight between the buyers and sellers, which no indicators tell you, if you don't understand that fight, you cannot take a trade. If you don't see that fight, you cannot understand the momentum. Okay, so that's why you have to consider all these points. Okay, so in today's session I have covered almost everything, and from the previous session also there was nothing left for me to tell in this, so that's why I didn't tell. One important point you have to understand: whenever a trend is broken, whenever you see a trend line is broken, that means the candle is digging into the opposite directions area. It might be buyer's area or it is digging. We have to see the response of the opposite area. So as soon as, for example, now I saw this breakout candle which broke this level. Okay, I have to see the response of buyers. What are they going to do? It is asking a question, what is the response of buyers? If it's a weak candle, I can follow the major trend or the current strong trend. Or if not, I can follow the opposite direction. You understand? So this is a strong response from buyers. So it consolidated here. As soon as it went down, it is coming up. And you can also measure some points like this. Now this is nothing but a doji in how many minutes? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes candle. If you see, this is nothing but a doji. It has formed a doji. So price has gone nowhere in 12 minutes. But since we were in, we had seen so many red end candles. If you take out a 12 minutes candle, because the platform does not allow you to take 12 minutes candle, but you can form a candle of any minutes, any range, right? By default, it is in your mind. So if you take out a candle of 12 minutes, this is nothing. The price went all the way up, rejected. It closed here. So it is just a doji. The price were nowhere, it didn't go anywhere. It was ranging in one market. Okay, so you have to see that response. Now you see the buyers popped in. So this is how you should match, and then you should match. Now the major trend is downtrend, the major trend is pressing it down, and the minor trend is uptrend, which is pushing it up. And what is happening in this fight? The momentum is fair good, and from here is the actual point where the sellers previously made a difference to the price. But now the sellers have moved down. They are making the difference here itself. Okay, so what could happen? You see, the next candle went down. So that means the trend is still following. This line is still being followed. Okay, so this is how you should try to now understand, and you can even try to predict some 2 or 3 candles. At this moment, don't predict the next candle itself, because we are understanding the trends with the price action. Try to predict next 2 or 3 candles. The next candle is something more difficult than 2 or 3 candles, because you will get some retracement, right? If you're predicting next candle, sometimes you will get a retracement. But if you're predicting next 2 or 3 candles, if you know that the price is going to go down, you can give it 2 minutes, maybe 1 minute, there will be a retracement and then it will come down. Okay, try to do that. Okay, and note down all the questions, guys. As I told you in my previous session, you have to note down all the questions that you are facing. Any troubles, anything, you send me an email after viewing all the course videos. Okay, don't send me separate email, because I will not be able to answer it one by one. What I will do is, when I get a whole document from you or a kind of whole big email, I will take out that one email. I'll be preparing a video on that. If you send me multiple emails, I might miss one email and I might not answer your question in that video. So that's why send me one email with all your questions, and after that I'll prepare one video and I will share it with you so that it will help you. Okay, so guys, for now just start practicing. Speak to you in the next video and keep practicing. Have a nice day. Goodbye.